Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording a little early on Thursday, the 12th, because I will be traveling mañana. My name's Ben Maldonado. As always, I'm here with Barry Hederachi. And on today's show, we got counter trends, triangles, and fat pitches. So stay tuned because the fat pitches obviously are what we look for. And the thing that leads to them are counter trends and triangles. And Barry, how we doing today, Barry?
Doing good, doing good.
Yeah,
Little little early for the podcast, but that's all right.
it's okay. Due to
Mhm.
travel schedules, we'll get it going today. But we are getting a very nice counter trend that could lead to a fat pitch in the E-mini.
Absolutely.
So let's jump right in. What are you seeing?
What I think what's interesting is we keep hitting these same numbers. When you keep circling around the same numbers, we're in some kind of a consolidation. So 55.66, it was just like last week we talked about it, and we're back. Yesterday we came and tapped it. Today we got through it almost at 6,000. Well, basis the daily hour rule, I mean, really the next stop we have is 56.82. And you guys know in August we got up very close to it.
Mm-hmm.
And well, we could do it again. In the meantime, I would really watch all the trend lines, including the one coming off the highs right there. And if you do that, you can see, I mean, even the trend line touches below 56.82. So it's in here. It's sort of the really the area we want to watch. And what are we watching for? Well, we're watching. If you guys are new, just give me 30 seconds to catch you up with what's happening. We had a huge cycle expire at the high in July, and then we had this counter trend high expiring again at a very important place in time.
Mm-hmm.
And then we had, of course, some kind of a move down. So, of course, the move came in on decent support. We stopped inside bar, outside reversal, and basically we're only up 2 days. I mean, a lot of drama, right? But
You're absolutely right. It's only
I
2 days
mean,
because
it
we had
feels like a
three,
month with the price action.
right? We had three inside bars.
Yeah, but it feels like a lot, right? A lot of
It
drama going
does,
on, the news and
absolutely does.
spikes and all kinds of things happening. But technically, we're 2 days up, and which is not a lot. So I would say any kind of a decent counter day, if it's not one day, it 3 days is really like the likely number we're going to go towards. So that would put us into tomorrow's price action. So we'd want to watch that, see how that happens. Once a counter trend starts, you really have to wait till it finishes up, because on the way up, sure, you can take the trades from level to level, but we're also keeping an eye on the bigger picture. So we want to not forget the 90-week, like the weekly charts and what's happening there. So
Mm-hmm.
the reason I keep talking about is, we had important things happen at these highs. And until the current price establishes itself clearly above 56.82, we're kind of playing it, with a really short leash. I think that's the way to approach it. That's the way we're approaching it. So we'll talk more about this. We look at it in a couple of different three angles as we get into the different time frames and the cash chart, and we'll move from there. You have anything to add to the just the E-mini chart,
No,
Ben?
I think you're absolutely right. We're in a zone now where we gotta, there's structural resistance, so we gotta watch and see if we falter here and
Mhm.
roll over. There could be a fast move down coming.
Right. And like I always say, if you think like a criminal, the
Right?
thing that has to happen is some kind of a false break up here would be the most criminal thing,
Ideal. Yep.
because that would get everybody on the wrong footing. And we know how often the S&P makes false breaks. Let
Hmm.
me just remind you of two. Here's one,
Yep,
right?
right there.
I mean, here's a low that came
At a
in,
major low, right?
very huge low. Again, huge, a lot of cycles expiring. We were looking for that. And, we had 2 days up, and bam, we went back and did the sort of the flush and clearing up all the sort of the weak hands, putting in the low, false break. And from there we began. And then we had this couple 3 month pullback, after the July high back in
Hmm.
23. And what happened? The low came in right on the 90-degree line, which is legit, that's kind of where
Hmm.
you want it. came back to here, touched it again, one day up, and a false break,
Mm-hmm.
and then back on up. And so there we had a false break line being the 90. And well, here we are. So I wouldn't put it past it to do a false break. Well, here's another one. I mean, look at the 21. If you
Mm-hmm.
look at the high here, now you can call for a false break off the high, November 19th high right here. We had a false break, really couldn't do anything and fell. But we really had a false break on January 4th. If you
Mm-hmm.
consider, sort of the highs that came in around December 30th, right? You see
Right.
that right there. False
And
break.
they also had low volume holidays to mess around there
Oh,
too.
it was. So look at that. One, two, three. I know there are plenty of others. I mean, there's one here.
There's
So
one before that dip in
right
March.
here,
Yeah.
you know.
Yeah.
So, this is something that can happen more often than not. So that's why we talk about false breaks quite a bit. And the thing is to really be prepared for it, because in real time, the mind really doesn't quite go there. We're not used to false breaks naturally. I think we just tend to kind of go with the trend. So,
Mm-hmm.
so if we get, yeah, so that's what's left. If we continue to go, if we get past the third day, which is tomorrow, let's say Monday, we Sunday night, Monday, we're moving higher. I think then we have to get ready for a false break, probably, I don't know, sometime towards the end of that week.
Mm-hmm.
So that's what it's looking like. Let's move to let's take a
Gosh.
look at let's look at the cash chart. It's a calendar chart. And here we had 55.82 would have been the ideal resistance if the time was right. I mean, we could have gone up. I mean, this could have been done on 3 days and gone up there and tapped it. It would have been textbook move. And of course, we kind of did it twice before. We had it here, right? And we had it here that almost got
Mm-hmm.
there in reverse. So it doesn't mean we're going to keep repeating that. So fair enough that we get through it. So on the cash chart, it's 56.73 that we need to settle above. And this thing's actually quite serious because we had the 90 here, we had the high to high 45.
Mm-hmm.
So we have a lot of things happening right in here. Now, what's also happening, and I haven't forgotten, is that we have a potential Gartley setting up here.
Mm-hmm.
And that target will be up way above. It would be a little bit more than a false break. It would actually be. Let me just put it on here just for visuals, so we know. So Ben, that sets up, somewhere between 58.20
Mm-hmm.
all the way to 5900 is a possibility.
Sure.
So we have to keep that in mind. That's if we, once we settle about 56.73. And technically, if it gets up here, our targets are really the next run up is around
Yeah.
6,036.
Over 6,000.
Yeah.
Mm-hmm.
Anyway, that's just to, looking ahead, I think it's important to see all the different possibilities. But for now, as long as we're below 56.73, we're really looking for it to see if we can make a lower high. And the next one would be a false break just right up here. So that's what we're watching for. 55.82. If we kind of sustain above that tomorrow going into Monday, it looks like we're going to go up and test the 56.73 area. So again, this is where we stalled out last time. I don't know if we have more reason now to be so bullish that we get slice right through it. So let's watch it tomorrow and see what happens. But so the overall picture really hasn't changed because the high and the lower high is still in place. And the current leg is still putting in yet another lower high. Right, Ben?
Yep.
Kind of what's happening.
That 90 is key.
Yeah, the 90 is, I mean, we had two 90s, right? We had the 90 calendar day high and we had a 90 weekly. We'll look at that in a second. And here's the other thing that's making me think of a potential false break, and that's the fact that we took out the main line, the XP line, on this Gartley. And the reason I kind of pay a little bit of attention is we held the low, we held the high, so everything looked pretty.
Yeah, that's good.
It looked like it was pretty well in place.
Mm-hmm.
and this little dotted gray line is in there. It's not an accident. We're looking for it. This like to terminate somewhere very close to it, and the level for next week would be around 56, 54. So we'll see what happens. I mean, we got a lot more upside, but it's good to know where the sort of the key levels are. The
Mm-hmm.
other thing, moving on to the Dow chart, the other thing I noticed was the with all this drama about going down and everything that happened, essentially we held above the 180.
Mm-hmm.
We really didn't break it. We didn't consolidate under it. We talked about structural support last couple of weeks and how it's held. So because of that, it just points towards more upside before we actually turn around if we're going to do that. Now, the Dow high is right exactly at a quarter level of the square. It's right around, let's say 41,700, 710. And that's obviously it's an important level. We're coming off of the lows in October of 22. And you can see the square has been working really well. So,
Yeah.
so long as we're above that, we don't want to, be caught on the wrong footing. And
Mm-hmm.
so even the channel line, you can see we're just consolidating, doing all this business right along the middle channel. So it's somewhere, these are the areas to really watch closely. So anyway, that's what's happening. And and one other thing, what I've noticed is this year, after we got into like the March high, I don't know if you noticed, I know we've talked about this a couple times, which was about how the character changes.
Mm-hmm.
And ever since March, it wasn't so easy. Things were very, let's just say, uncertain. We went down, we came back up, and people would say it's the rates, it's the war, it's the missiles, and whatever else that's happening.
Right. Right.
But you can see how we're basically trading in a very, very tight, narrow 50% of a square here.
Yeah.
You know, so we haven't really done much. We've roughly been wrapping around this 180-degree level, about 40,266. And we go a little bit to the other side. We kind of like an envelope, these quarter sides, and then we go on
Mm-hmm.
the other side. So now we're on the upper side, and we're going towards the edge of that, and so we have to pay attention to that. And that's why we keep talking about the same levels all through here, because prices literally hang around the same level. So
Mm-hmm.
here's the geometry. I'm just curious to see what happens. We're not using this for trading or anything, but just confirmation and just the beauty of how markets move. We'll see. We'll see what happens here, but um,
Where's that
boy,
edge of the circle?
well, for tomorrow, it'll be 56.33.
Mm-hmm.
And so we'll see. We might go a little above, a little below, but anyway, nonetheless, we'll see what happens. I think we covered all the key levels and how we're framing this period since the 90-week cycle came in. You can see where we made a high, low, and the next following high and the low is well within. So obviously, this is why we are triangulating. And if we make a lower high, that just adds to the triangle. And if we come back and make a higher low, we're going to triangulate even more. But we already have high and a lower high, low and a higher low in place. So I think this is why we have to really watch it closely and not get pulled into the wrong side, because this is where it happens when that third part comes in.
So where's your key support for the coming week?
Well, the support, you mean on the daily
Mm-hmm.
here?
Yeah.
The coming week, it's really more about resistance, because since we didn't stop at 55.66, I'm looking at this 56.82 number, or we'll drop down to the 30-minute and we'll get the other numbers we want to look at.
Mm-hmm.
Now, this 50 basis, the daily 55.66 is really important, because you can see yesterday's high came in right there also.
Yep.
And so we'll see. I think we would just walk away with 55.66 basis the daily, and more importantly, 56.82, just to make sure, where we're going to be in this range. I mean, it's
Mm-hmm.
possible that we spend 3, 4, 5 days in here, It just seems like the market likes to do that. You can see how every time we come in, dipped into this, it's like
Hmm.
a little vacation, right? Which is right. It spends a little bit of time in there.
And then
So
the sell-off comes, so it looks like distribution, doesn't it?
it's a triangle. Yep, it's
Hmm.
a very fourth wave-ish looking triangle, and
Hmm.
that definitely could be distribution. Here's the 30-minute. We had, I mean, here's what we talk about: breakout and hold above. Beautiful
Nice.
this morning. We had
Mm.
55.39 was our level. The market ran up and came back to dip it, and ran up to 55.85 and went a little above it. Now, really, 56.29 is really the next level, and that's a level that we originally were wrapping around for days and days and days, giving us nightmares.
Hmm.
And hopefully, we can hold below that, um, but not necessarily. So, what I mean, we play the squares as we go. Since we got into this full square, I mean, this is technically very bullish till we get to 56.29
Sure.
basis the 30-minute chart. For support, just looking at this chart, you guys can say it's 55.39 is really the critical level. At
Hmm.
this point, going up, we've been up for 2 days. I really don't see a big reason to get under 55.39 unless there's some major issues. But the key level to watch is 54.95. If this goes out, I think then I know it's quite a ways, but this is for those people that really want to confirm, the highs in
Right.
place. This would be like the last line would be 54.95. The earliest obviously would be 55.85, and you can use each of these levels as DEFCON numbers, like 1, 2, 3, 4, 5, and you can dial them up. So yeah, that's the 30-minute. You can see not much happened here. We were stuck between 54.48 and 54.95 for most of the week. And then we had that little slip up on the data. We had a false break, came down here and whipped right up like nothing happened. And like nothing happened, we just moved higher, came back to retest, and now we're back on the regular plan, I guess. So
Hmm.
56.92 there. Let's take a look at the weekly, which I think is really the interesting chart here. Why? Because we have an inside week. And
Hmm.
unless tomorrow is like, we go Zerk.
Gangbusters, right?
Yeah, for some reason, it looks like we're going to have an inside week. And if that's the case, then next week's going to be the key, and so case in point, if we take out Monday, if we take out this week's high, it's very likely we're going to probably go for a false break. Very likely, not
Hmm.
confirmed. And if we don't, we could end up with another inside week, which is actually kind of bearish with this pattern. So technically, look, if you want to look at the weekly, we only had 1 week down, and the inside week really doesn't count. So we've
Hmm.
been just 1 week down, and all this other stuff is a bunch of noise to make you forget what happened on the downside. So,
Right, right.
that's what an inside day can do. So here's another inside bar. We were looking at this when the low came in. You can see how next week we took it out. The week following that, and
Hmm.
from there on we traded higher. So these things happen again, just like false breaks. These can happen more often than not. I mean, here's another one back in late December.
Hmm.
That got it. They're all over the place. So for next week, and also, the other thing was how we held the 1/3 of the square on the way down. So we basically did from half to 1/3 was a move, and it all looks okay. But like you said, it looks like a little bit like distribution, maybe a little
Hmm.
early to call it, but that's what it looks like.
We'll have to see how it follows through or not.
Yeah, well, I mean, there's a super high probability we finish up at an inside bar, so that really opens up next week for more action.
Hmm.
Anything else you want to add to that, or we're good?
No, I think
Yeah,
it's good.
yeah, I think we can watch that. Let's move on to bonds. So we did get the break above and hold above part.
Yep.
This doesn't look like a false break this time. It looks real. And what gave away was actually being able to hold it here last week. We kind of got above and held above. So let's see. I really didn't expect it to get on top of 125 and move higher, but here we are. And This is why thinking and what happens in squares are the way to go because
Hmm.
it helps you really frame it and stay out of trouble. So for now, as long as we're above 125, 124, 125, I think bonds could snap higher. Now, not too much higher because we do have a 90-degree level a little bit. I like the 72 and kind of odd things happen. I kind of look at both squares. 72 has been working fairly well.
Hmm.
And so once in a while, you want to look at the 90 and you can see, we're not too far. It's right around 130, 129 and some change. We have 90 degrees up. Can that be a good square? It could. Why? Because, we had turns right around every 45 so far. Look, we had a turn here, turn there, turn at the low, and a little pullback turn here. You can see, right? I mean, we've been hitting it.
Yep.
So, except for this one, well, even that we kind of came down into it from here and moved higher. So it's possible we're open up until about 129.22. So let's keep that in mind. As long as we're above 124, 125, I think we don't want to mess with bonds on the short side. Not just yet. Let it play out and see what happens.
Agreed.
So that ABCD that we drew in, well, it keeps everything real. We don't get too lost in the whatever else is happening. And we have a 128.07 basis the weekly, which would be 3/8 of the square from the low. And that's a natural sort of stalling point. And you can see already we got to the 3/8. If you can see right there, we got right into the, we touched the gray line, the dotted line. See that?
Yeah.
And we turned down. So nonetheless, 128.07 is not too far. So we have that. And if we can somehow grind through that, then we have the 50% of the square where the ABCD also ends. And that's sort of the big deal, 132.
Yeah. Grind is the operative word, man. That's what it looks like on the chart. It's just, it goes up and then grinds and then goes up and then
Mm-hmm.
grinds, you know,
Yep. Yep.
but it's definitely making progress to the upside.
Yes. And like we saw on the daily, once it gets above those levels, you just want to leave it alone.
Yep.
And
Don't fight it.
and you can look at the long side, but we're not fighting it long. It's just above that. So the
Hmm.
next fighting level is up here when we get up in there.
That's right.
Not fighting level, like it's a selling level.
Hmm. Decision point.
Mm-hmm. So that's up in, right up in here. So let's play it like that. It looks like it's going for some kind of a spike high because we can see how the whole thing is kind of accelerating, right?
Hmm.
And let's move on to crude.
Looky,
Which,
looky.
yeah, look at that. So we came right up to our support level. We had 64.75. It came close enough. Um, so that move went, full square. And once it does that, we didn't have a whole lot of timing, but there's enough timing in there. I it, and the thing is, I'm not sure if we're completely finished. So what do we have to wait for? We have to wait for the next pullback to see if we're going to hold above this level or if we're going to go make some kind of false break against that
Hmm.
low, this is how we kind of look for the false break because there's a low great, the reason why we say pullback is we want to see is it going to hold above or are we going to false break it like we did, here, 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 like
Every major turn.
practically every major
Hmm.
turn,
Hmm.
we had some kind of
False break move.
yeah, here and here. So it's everywhere.
Yeah.
So we want to watch for that and then we'll see because I think once we get rolling, there'll be plenty of upside, but we're not quite sure if the downside is done just yet. Looking at the weekly, same thing. We were expecting, kind of low to take out these the old lows right along the 60-degree line, but we didn't quite get there, turn a little early. So let's give it the time and again, now we're at a square line, so it's a decision point. Let's wait for the daily to confirm what we're looking for and take it from there.
Yep.
See, there was a reason why we hang around without really having uh,
On gold. Yeah.
a stronger pullback, right? So one of the
Hmm.
things we talked about here was, we broke this upper, move the wedge pattern, right? And we squared out, and all these things happened. But look at the how shallow the pullback was.
It
Didn't
was
even get to, right?
totally managed. It looked like
Yeah.
there someone was just holding it up.
Mhm. And we even talked about, well, even if it gets down to the 50%, it'll be super healthy. We can do
Hmm.
the 1/3 line. And the reason we were kind of watching it, yeah, we had a lot of stuff up above, but it just wasn't quite ready to go. It was just hanging around this square. And now we had a very clean breakout. And normally that only means one thing. We have more to go. And that means the next support resistant level is around 56. Thinking of the E-mini already.
No,
Uh,
you're
around 20,
projecting future gold prices,
yeah, 2670. Yeah, future. So yeah, so it's around 2670 is really the next level,
which is beautiful.
which is, yeah, it's amazing because the gold's
Yeah.
on the run. And I think now things are going to get real. We looked at the junior miners chart the other day
Hmm.
on the Wednesday drop that we did. You can see how that's just starting to ready to break out. So maybe gold is actually just starting to do some new things, go places where I haven't been, in a while.
Yeah. I mean, that's all-time highs right there.
Yeah. And so watch 2550. Now you guys know why that's really the important level. And long as we're above that, the market's strong, things should be good. I mean, the only thing that would bother me about this is the potential false break setting up right there
Right.
against this high.
Hmm.
But we already know that. So let's watch that. But the move looks very strong and solid, and we'll watch it. Looks good. And now you guys know the upper side, and the quarter square would be around 2610.
Hmm.
So there's that.
Looks good.
Mm-hmm. And here's the confirmation on a bigger level. We had
Yep.
that,
Getting above that 90.
man, this is a 45 week cycle, and we're starting to pull above it, and decisively, not this Mickey Mouse stuff.
Right.
So, long as the weekly is above that, I would even say above the low of this week's low, or
The
maybe,
90 is what, 2550?
yep, 2550.
Yep.
Yeah, long as we're above that. I mean, look at the line we're carrying. So
It's
why
huge.
is the angle so important? Angle is important because when the angle is sharp, the momentum is really intact and it can really move quickly.
Hmm.
And even after, given the consolidations and everything. I mean, look, if you put the line here, you can see how even with the consolidation, when it got to the line, it took off, right? So and now we're having some space between the line and the lows of this consolidation. So it looks very strong. It's really pulling away.
Hmm.
And like I said, outside of that, as long as we're holding above that, I think we're good. Now we know what to look for. Copper held above the 60-degree line, which is the full square line. And with gold moving, looks like copper is also done with the pullback. So here's a low that came in on account. More or less the ABCD
Hmm.
ran above, came back. This is really what we talk about.
Perfect example. Yep.
Perfect example of price breaking above a square level and holding above. And so that looks bullish. And this is copper, not, doesn't normally run super hard. So let's look at 430 being the next level. If we can get above 430, then, we're almost guaranteed to get to 453. Looks good.
Hmm.
And the correction was very well behaved, right?
And I'll talk about silver because silver's doing nice things as well.
All right, nice. So here's the weekly. Now, weekly, once we get above the 420, 425, 430 came up on the daily. If we can really get above that, then we're setting up for the next big run,
Hmm.
which is much, much larger. So let's see what we can do here. So far, the daily looks convincing, but the weekly hasn't really quite gotten above the key level where we got to pick up momentum. So he's not on any kind of a bull market scenario yet. Let's move on to the dollar. Not much to talk about. We had the low coming exactly on our support. That was at 100.5 and went up higher, came back, higher low. Looks like we're going to consolidate around here for a bit. If not, go a little lower and check out this, go another point lower and check out the 99.50.
Hmm.
If not the 60 and get these lows cleared up. So we're kind of watching the dollar for now. It's lows this is partially sort of confirmed, but we really need to move higher, and looks like we're going to consolidate. So we'll let that wash through. Now here's the weekly, stopped exactly at the 90 degrees from the low. And this is why it's important to watch the weekly. Once you see the big picture, a lot easier to figure out and have the patience, right, Ben?
Absolutely.
Here we have.
Look at how that 90 just supported it after it even broke down out of the triangle.
Yeah, exactly. And really well. And this is the triangle that's kind of happening, what these 2 points, low, high, higher, low, lower, high. And S&P is right here, right now.
Yep. Yeah, exactly.
Right? So
Totally,
it's
totally.
same pattern. And this is what could happen. And it did happen in the dollar. We don't know, if it's going to happen anywhere else, but there it is. That's what could happen. That's why I talk about these patterns on the other charts when we see them. It sounds crazy, but they do come true.
They're all interconnected, man. All those markets are interconnected.
And the patterns, right? So we've talked about this break to the downside being some kind of false break. And for being a false break, we really haven't picked up any steam on the other side. So let's see if it's false break, or if it's a false break still in the works, or if it's actually a whole nother trend taking dollar down to 95. We'll have to look at that. But for now, it's holding. We need a little bit more confirmation on the daily chart to really take this seriously. It would have been nice to take out these lows. That's why I kind of pointed out on the daily chart, if we can take these out, it'll be kind of nice to have that false break in place. Instead of, now we had a false break here, right? So let's see what happens, but we're kind of waiting for a little bit of a green light. Is that a good way to put it? Because
Absolutely.
We're in the territory.
Until we get below that 90 support, it's, you gotta respect it.
Yep. So kind of the flip side story for the euro, where 1150 is resistance. We hit it last week, turned down, made a lower low. So euro is basically making lower lows and lower highs since we did the false break against the high back in December of 23. So until that gets reconciled in one way or the other, euro's weak. Let's see what happens. Maybe there's that big shift happening here. So we'll have to watch that. Again, we have to watch it. Why? Because it's coming off of a decision point, which was the 72 degrees up. And, we haven't been here for almost over a year. No, well, since last December. So it's a long way. Let's take a look at the weekly. Weekly, the same story. We've been sort of wrapping around this 109.50 level. So not much to do till we clear that one way or the other. We also have this triangle break. Again, I think this is a false break. We'll see what happens. So that's it for euro. What else we got left here?
Let's do the Hang Seng. That had some movement this week, didn't it?
Well, the Hang Seng is also in that same pattern that we've been noticing, where we're triangulating. We have a low and a high in place, and all the price actions inside of that. And you can see here it's even worse, because we have yet another second set of
highs and lows, and we're in the middle.
We're in the middle of that, right? Exactly. So not much. We're kind of consolidating sideways, whatnot. But knowing how levels work, we know 17,125 is the 50% level. It's more like 17,108. So I'll change that later. But this is the idea. We went below it, we're above it. So I think long as we're holding above the 17, let's say 110 area, it's more bullish than not. And it might be sloppy, but at least we're holding above for now, so it's not completely weak. Okay. And so there's still hope, and there's a potential ABCD that's coming out of here. We'll see what happens there. Also have a potential ABCD going down. So for now, I think 50% is look how sticky it's been since March, right?
That is the decision spot.
It's really been wrapping around that, and the fact that we're kind of holding above it, making a high and then a higher low. So looks like that's what it's doing. You covering natural gas this week?
Yes.
You are. Okay. You have good news then, I'm presuming.
It's slowly creeping. Yes. Another higher high.
Higher high, not much to do other than, anytime something is trending, you just kind of stay with it, until it gets to these sort of decision points, right? That's when you got to roll out all the charts and start taking a look at things. All right, let me put it back to you. We'll look at all the commodities. I know you got a bunch of stuff to talk about, so
Yeah,
let me put it to you right now.
We'll buzz through them.
And if you guys like our work, please remember to like the video and also to hit the alerts, subscribe. That's what I always forget to say. Right? All right.
Yeah.
All right, Ben, what's happening with the calendar day chart here?
Yeah, I wanted to start with the calendar day because you can really see how this is materializing. Yes, we're in a triangle. Yes, we have just like in the ES, we have the high and the low, and we're in between now. But if you take the reference of this full square, you can see that's the key here, right? If we can't get above that, it's rollover time. And then the next is the half square. So we're kind of, we're wedging into this smaller and smaller space that it's going to have to pick and make a decision here fairly soon. So the keys on this calendar day chart are on the upside, talking about, 19,760. And the downside here is 18,000, call it 18,600. And we're wedging in and it's tightening up and it's going to make a decision. And when it makes that decision, we have to be prepared to go with it. Let's look at the trading day chart. You can see the good thing here is today, we've got a full bar above this full square at 19,165. So as long as we can stay on top of this, we're going to push to this half square, and that's that previous, swing high. And that's right around 20,000. It's winding up. The specter that we have is that, this came in with a lot of timing. You can see it just on the daily here, the timing we had right there. We had a 180, we had a 135, we had a 60, we had a 30. And then we got the big push off, and now we're sitting in lower high territory. So it's all very suspect on the bullish case until we see, settling above this half square is the first test. And then the next test would be to, settle above the full square. Anything else to add here on the daily before we jump to the weekly and the monthly?
No, we're good. I mean, we have a full square of action there. If you look back to the last low and high, and we're just crossing through the middle. So it's not as weak as you think. So we want to see how much further it can go.
That's right. Now let's look at the weekly and the monthly. So here's your weekly, and as you were saying on the ES, with all this action this week, it's an inside bar. We've had, 2 down bars, and now we got an inside bar. So next week, if we finish with an inside bar, barring a huge rally tomorrow, next week's going to be like a key decision here. Do we reverse up, get a reversal bar up? Do we get another inside bar, or do we actually take out the lows and really start going? One of the key things we've talked about is, this 90 cycle at the high, and that specter is kind of still hanging over this market. From a weekly basis, this 90 here is key to the downside, and the half square here is key to the upside. So that's 20,100 on the upside and like 18,200 on the downside. It's pretty straightforward. Let's take a look at the monthly. We're still early in the month. We pushed a little bit below this full square. Now we're comfortably above it. Looking like it's hard to say what's going to happen the last 2 weeks, but right now we're just working on an inside bar, knowing that we have big cycles that expired at the high.
Yep.
Really, really big cycles. Anything to add on the bigger time frames?
No, we're good. Good job.
Yeah, we just need to see whether we're going to fail or at these counter trends are going to fail here, or are they going to keep pushing. That is the key thing. Let's take a look at Bitcoin. Speaking of triangles, look at this one, man, tightening up now, and we're really, the apex is at this half square. We were talking about that level last week, this 56,270.
Hmm.
Above it, you could, it's the apex of the triangle. So it's really hard to say, oh, it's super bullish above it or it's super bearish below it, because we got to see this triangle break. I mean, we got like four good points. One, two, three, four. Are we pushing up to make a fifth here? Possibly. There's not a lot of runway left in the triangle, though. It's really tightening. So we'll see how that goes. Above that half square, though, you could say, okay, the bulls do have an edge. Below it, you got to give the bears their fish, their trout, because they'll be in good shape. Anything to add on Bitcoin? I mean, it's pretty clear that the triangle's dominating here.
Yeah, and we're making lower highs and lower lows, except for this last low. So we just have to watch it until it finishes this long broad. I don't really want to call it distribution, but this correction, I guess.
Yeah, it's really been really been wearing out the bulls, because
Mm,
you watch on X, there's a lot of crypto guys, and man, they just
right,
are so
right.
frustrated. So right about that time is when you get the big break and the big move. So,
Yeah,
but
I
we'll
think, I
see.
mean, the time of bull markets in crypto is over. Now we're just sort of trading like regular markets. It'll have its times and then back to consolidating and
I mean, this has been a good, 6 month consolidation.
hmm.
So
Yeah,
it's definitely wearing people out.
yeah.
All right, let's talk about the commodities. Last week we talked about the grain showing signs of life. They we have proof of life now, because we're getting some lows coming in and higher highs. So we're gonna review those. Sugar, same thing, had a nice pullback and turned up. Silver, really nice move, especially today, 4%er today. A reversal up, and things are looking good there. And
Mhm.
we'll end with nat gas. So
Right,
let's start with the grains. So here's wheat on a daily basis. Nothing dramatic, but just a nice, steady uptrend, right?
right.
Low came in, high, little pullback, higher low, push up, little small pullback, higher high. And look at this. This is what we talked about last week. Because remember, last week we were right here. We said,
Mhm.
man, the first thing we got to do is sit on top of this. Well, today's bar is closing right on top of the square. So this 578, 579 level is key. As long as we can stay on top of that, it opens up the next level, which is the half square at about 653. So on a daily basis, it's doing what it has to do. This low, by the way, I was just checking it from a couple other things. If you
Mhm.
go from this May high
Uh-huh.
right in here, it's roughly a 45 by 45 there.
Right.
So a nice finishing leg, and we're
Mhm.
starting to see, signs that yes, that was a good low, and we're moving up out and sort of, starting the uptrend, where, because you got to get that initial thrust to be able to handle that pullback to get your higher lows and to, get on top of these squares. And
Right.
that's what we're starting to do on a daily basis. All right, let's look at the weekly. Another up week.
Mhm.
We printed another higher high this week, which is good. The other thing I've got on a weekly basis, this from high to low was 125, which is 125 weeks is good. That's a 2 year sort of correction, kind of what this market does.
Mhm.
And again, this is the second week of higher highs. We're starting to push up enough to where pullbacks can stay on top of this half square, or stay on top of this one by one, which is what you like to see. Here's your monthly. I haven't quite gotten to an up bar yet, because here the last month was an inside month, and the high here is, what was the high last 2 months ago? 95.92. The high this week is 591.75. So we're just about there. Like to see us push up and before the month is over and get that higher high on this month, and that'll give us a monthly reversal. I think I pointed this out last week, but I want to make sure everyone knows it. High to low in the great financial crisis was 28 months. High to low here,
Mhm.
high to low, 28 months.
Mhm.
So if that
Those aren't
cycle,
accidents.
no, so that's kind of the cycle that's in that market. Again, this is not 5 minute bars. This is monthly bars. So 28 months is a cycle that repeats in this. I feel comfortable with the price action and what's happening, that we're getting a good low in wheat, which is leading the other grains out. Anything else you want to add on wheat?
No, we're good. I think you're keeping everybody well informed.
Okay. All right, let's jump to the next one, which is our friend corn, the lowly corn, which was struggling. But look at what it's doing. We have the low, pulled up,
It's getting
pulled
bought
back.
up is what's happening.
Yep. Higher low, pull back today. Again, if we sit on top of this full square, this is what we want to see, right? This is the get on top, stay on top. So as long as tomorrow's bar stays on top of this, we've captured some territory here, and now we can go up and start challenging, build up and start challenging this half square around 447, 448. On corn at the low from the lower high in May, for this high here, not the false break high, 54 by 54 at that low. Again, decent evidence that we had a good low because we got a decent reaction off of that.
Right.
Let's look at the weekly, because there's some interesting stuff on the weekly too. See this 120, Barry?
Mm-hmm.
If you put it in price too, it's almost exactly 120 by 120.
So it's no accident that you're bringing up all the grains last couple of weeks.
Yeah.
Right.
This very good low. That's a square out, right? Square out is what you want to see. But more importantly, you got a square out and then a reaction, right? We have 1, 2, 3 straight weeks up. Maybe this week we're correcting because we're battling here at this full square, which is normal, right? It's resistance. So that's the next big thing we got to sit on top of, is around 412. We got to get above that, sit on top of it, and then we can be even more confident that that square is in place.
Mm-hmm.
We do have the square. Now we're just trying to make sure it gets in place by getting on top of that square or getting some sort of higher low on a pullback here.
Right.
All right, let's take a look at the monthly. High to low here, 26 months. High to low here, 28. Not exact, but right in the ballpark. And again, we had the low, and then we got a reaction. We got a higher low. I mean, a higher high already on a monthly basis this month. So all in all, corn is probably one of the weakest one of the grains, but it's also showing signs of bottom. We got this 120 by 120 here on the weekly basis, and a nice reaction. So I think it's coming out of the hole, and even on a daily basis, we're getting higher highs and higher lows. So corn looks good on the bullish side.
Mm-hmm.
Anything to add? Anything I might have missed you want to throw in on this one?
No, I think we're perfectly in time. And I think those lows that you talked about, they all came in. I saw those. And we're good. I think this is the time to start paying attention and start trading on the long side.
Exactly.
It's just all it is. I mean, we saw those weekly charts. It's all there. So
let's take a look at the at beans, the last one in the grains. Okay, what do I have on beans for you? Daily low, I've got a 60 by 30 from the July high. So this high here gave us 60 in price, 30 in time, which is a good square. And then again, look at the reaction off of it. Good push up. We had a little pullback this week because last week we were saying, okay, we had a nice push up. We got to watch where the first pullback goes. There's your pullback. And today we're reversing because, this was your low bar and we took out the high today. The key here we want to watch to really get sort of more all clear and a higher probability that we do have the low in is we want to clear this full square at 1035, call it. We can get up on top and sit on top of that 1035, then we're in really good shape and look for higher prices in beans. Let's check the weekly. If we go from the April 23 high here, Barry, this one right in here, 72 by 72.
Very nice.
At the low, which is a very good square. And we're getting reaction. So we had the low, we had an inside bar, and then we got 2 weeks up, and now we're trying to see what we're going to do to finish up this week on. Like to see us get the next big marker for this one on a weekly basis is getting above this 1060 half square. right? If we can sit on top of that, then we can come up here and attack the full square. But we have a nice square at the low, good reaction. Let's see if it can build and give us a higher low on any pullbacks on a weekly basis. Here's your monthly. What I like about here and what I wanted to point out here, this month so far, while it's basically call it halfway through, the bar is printing on top of this full square. We can remain on top of that full square. It gives us higher confidence that we've got the turn. And that this also looks like if this bar, if we can actually take out the high of the August bar, then this bar looks like your false break low, right? Pushed down and then turned right away. So we'll see. We'll see. We need more price action here, but what we're seeing so far is promising. Anything to add on beans? Let's go to another candidate that we were looking for, keeping with our title, another candidate where we were looking for, consolidations and corrections, sugar. So last week we were up here on sugar. We said, okay, it's time for a pullback. Let's see if we get a decent pullback that gives us a higher low. We liked this low. And now we're saying, okay, what do we have? Well, looks like a little ABCD right down into the 1 by 1 and a big reversal today, right? We had an inside bar yesterday, took out the high of Tuesday's bar. So that's a reversal. Now we want to see us push up, take out this high, take out this trend line, and then it could be off to the races in sugar. Yeah, I also loved how this low came right in on the full square. But this is the pattern, right? You come in, you make the low, push up, pull back, higher low, reversal. Doesn't mean 100% of the time you're going to get the big third wave move or the second leg, but it puts you in a position to where, the pieces are in place for that to happen.
Plus, the selling's done. More or less.
Right, because we got the reversal. All right, let's look at the weekly. The weekly, what I wanted to point out here, and this is an interesting one. Low to low, from this low to this low, is 225.
Well, okay.
And that's good.
Yeah.
And look at the reaction on a weekly basis, right? We made the low. What did you notice here at the low, Barry? A false break, right?
Yep.
False break with 2 weeks before we had a down bar inside, and then a false break closing at the high of the week.
And a full half square move.
Yeah, and a half square move. That's right. This low looks pretty good. We know on the daily we got the pullback and the reversal. Now on a weekly basis, we want to get a close and a bar above 1989. That's the next marker for the weekly. But the low looks good. Let's look at the monthly. Here you can see the false break even better, right? We had a low, inside bar, another little lower low, and then here's the clean out low. Low to low here, 52 weeks. Another good number.
Yeah.
Right now we're working on an inside bar, but again, the monthlies take longer to develop, but the characteristics are there. We have the low on the half square. We got the false break. We got 52 low to low. Let's see if we get the reversal bar that gives us, more confirmation and higher probability that everything's in place. Anything else to add on sugar?
No, we're good.
Okay.
The levels. Yep.
Let's go to another little stellar one this week, especially today, and that's silver. Look at that bar today.
Yeah, man.
So silver, we've been talking about and when we get to the weekly, I'll show you the concern here was the same as gold. We had this, you pointed out gold did a 45, I think, or a 90. So it was a pretty good weekly square that we were concerned about. And then it just consolidated sideways and then took off and made new highs.
Right.
Silver's kind of done the same thing. It had a little deeper correction and it hasn't quite caught up with gold yet, but today's kind of a day where we're seeing it do some catching up. Gold's up 1.6%. And silver's up over 4% today. So what we were looking for off of this low, which came in nicely with a little false break as well. We got the push, full square push, right? From low to high, pull back to the half square, big move today. But let's look at the daily, right? For the daily, we want to see a close above, let's say 30 and a quarter. Takes this whole if we can go up and then sit on top of it, this whole structure here acts as support. And that's your daily. Let's jump to the weekly. So what do we noticed in the weekly? We talked about the 90 at the high, right? We said, okay, when the high came in, we said, okay, we got to watch out. Not only were we up against a full square, but we did 90 weeks. There's going to be some sort of, odds favor there's going to be some sort of reaction or correction or consolidation. We did this ABCD down, and now we're reversing hard, right? Reversed up, half square, pulled back, couldn't even make it back to the full square. And now we got this reversal bar here this week. As long as we close the week over this 29, call it 29.75, we're opening up the full square for next week. So the weekly looks in good shape. Remember, the correction all came back, stayed above this structure. And all this price action here, while sloppy and, toppy, and you could say ugly, I mean, it's basically at, right on top of the highs from 20 and 21. Let's look at the monthly. I want to show you some wild stuff in here that I was looking at, Barry. From the 03 low in here, right in here, to this high, 90.
Wow. Okay.
90 months, right? 90 in price, 90 months. The pullback, look at the pullback. So this is a square of 45. So 2 is 90, right? So if we go from here to here, it's 45 months, high to low. Then if we go from here to here, it's 45 again.
Right.
So this thing is really harmonic with the 90. But if we do a 90 from here to here, I said, okay, where does that put us? September of 2027. So if we go from, this was a false break low, like see how they did the false break?
Yeah.
So you could say the move started here. If we do another 90, like we did from the depths of the, the great financial crisis to this high, which was 90, if we do another 90, this bull market should last into September of 2027.
Looks good.
And if we do it in
know.
price, if we do it in price, there's 45, there's 90. It's over $60 silver.
Nice find. Yeah, it's great.
So that's on, it's big picture.
We're above the key level here, which is
absolutely right there. And that's 2660. Above that, and we're bullish, right? If we just go level to level, we're looking at about 38. We go 38 there. Everything about silver to me looks good. The move today is comforting because it's starting to, it's starting to catch up. It was lagging gold, and I just don't see anything really troublesome yet, unless the price action changes. I don't see anything super troublesome. How about you?
No, it's good.
Okay, let's jump over to finish up with nat gas. The little engine that could, right? I mean, look at this thing. We made the low, right? Went up, pushed up, made this first high, and then we pulled back with a higher low, and now we're building again another little platform. Because let's just look at from this swing. We pushed up, made a high, pulled back, made a higher low. Now this week, actually today, we've made a higher high. And today's bar is sitting on top of the half square, which is what we want to see, right? We got to get above that half square to open up this full square. And the half square, just for people's reference and price, is 223.
Right.
So now now that we have a bar on top, as long as tomorrow we stay on top of this, we should keep pushing and pushing towards the next level, which is around 283.
It's good. On track.
Yep. On track. Let's look at the weekly. I got some numbers for you here too.
Bottom of the triangle.
Yep, we're at the bottom of the triangle. Now we got another up bar this week. Man, this stuff is crazy harmonic. From low here to high here, in this, or I'm sorry, low to low, we did 90.
Yep.
High to high, we did 45. This is the one. If you take the lower high, not the false break high, to this low, we did a 90.
Wow.
And again, this is not 5-minute bars, people. This is weekly. This is weeks.
And
So we
numbers
got
like that, you don't need RSI. Right?
so basically we've got, take away the false break, you got a
Mhm.
cycle, a 90-week cycle, high to low. So this low is good. And now we're building, however painful it is, and for everybody that, we're all adrenaline junkies, but you know, it's building to move out of this low.
Yeah.
Because the low hasn't been violated on a weekly basis, right? We made that
Mhm.
low, pushed up, pulled back, we got a higher low. Yes, we're triangulating. But with this 90-week cycle completed, we know the odds are tilting in the favor of this triangle breaking up. Now, how do we get the odds even further in our favor? We wait till we get above this half square, right? Get above, stay above that half square. Then we can say, okay, this stuff's behind us. But the cycles are there, and you can see from the past, and anybody can do this. You can go back and look at how price act in the past, and then look how it's acting now, and see if you can find those repeating cycles. Let's jump to the monthly. The thing I found here, low to low, we
Mhm.
did 45 months, which is a good cycle.
Yep.
Otherwise, again, we're in this triangle. The key here, though, is we're saying we have cycles at that low. And now we're looking for confirmation and evidence that, okay, are we building? Is price acting like it's going to push up and make a higher high
Mhm.
and build, a bullish structure? Right now we're in a triangle, so it's hard to, get super excited, but we can see what's happening. Actually, already this month we made a higher high. So assuming we don't take out that low,
Mhm.
the bar is going to be up and we're going to move, be moving higher on a monthly basis. Anything else to add here on this one?
No, we're good. Everybody's informed.
Yep. So that's it for me on the commodities.
Mhm.
In terms of a topic, Barry, I was thinking, we only have about 5 minutes left here, but what I wanted to briefly touch on is when you're in these counter trends, right, and you're trying to find the setup for the fat pitch, what's the mindset that you use? Like, how are you approaching the markets differently than, say, okay, when you're in a trending leg?
Well, in either case, you have to, it's funny because I was talking to my son this morning about this. You have to know what the setup is. You have to know what setup you're looking for. So if it's a counter trend, pretty much everything, like for example, we talked about the ES today, was about, well, what kind of a setup are we looking for? We could have a false break, we could have a lower high, we can have something greater than a false break. You know what I mean? Like we can have a lot of different things finishing up a second or a first pullback, right? We're looking for the third, just staying focused on that. And it doesn't give you a lot of room to go wrong, because if it goes, let's say we have a low in place, or like the S&P, we have a high in place. If you take the high, July high, call that that first, let's say that's the first leg. Then the
Right here.
second came up as a lower high. So
Mhm.
that doesn't have a whole lot of room. I mean, if it goes a little bit higher, well, the whole thing's canceled, then you have to wait. But if you get some kind of a setup to sell within that, while it's putting in the lower high, the big one, the August lower high. I mean, normally it doesn't consolidate there for 2 weeks, it's not so
No,
it's
no.
not so tricky. But you're looking for that, and you're looking for a decent sell signal, and that could be based on a daily chart or 4 hour or whatever time frame you're comfortable with, and then you go with it. But these days, especially now, once a big high comes in, it doesn't necessarily mean we just go straight down. So we have to sort of work it through. But the way you work it through is you wait for the sell signals that that you understand. So that's what I mean when we talk about a setup. You want to know, any kind of, if it's a trending market. We talked about yesterday. Last week, how do you trade a trend? Well, you look at the counter trends and you try to enter the market during the counter trend, which is the lowest risk, right? So that's trending market. So if we're trading the corners, which is more like, trying to catch the fat pitch. Now, even that, we don't have to, nobody forces us to trade the corner. We can still catch the middle of it. once it turns.
Mm-hmm.
You know what I mean? Like you won't catch as much, but hey, at least you got lower risk and the market's going in your direction. So one way to split that up would be to think in terms of, you need some setups that you're comfortable with, that you've tested, doing a trending period, and then you need some kind of a counter trend system for when we're looking for corners.
Mm-hmm.
So that's one way to split that up, but you definitely need to know. So how do you know when it's a corner versus when it's just another pullback within a greater trend? Well, in the case of the S&P, we're watching here, the greater trend kind of broke once we took out the prior swing low, like in Gann terms. Yeah, right there. And the one above that we took out too. So the consolidate, yeah, right there. So as soon as that happens, we know something happened. We know something different's happening. And the other way is you track the bigger cycles. So we had the 90-week cycle. We had a 45-day calendar day cycle and a few other cycles that happened at the high and also at the lower high. So once you have those in place, then okay, well, I might not be able to do the trending at this point. Let me watch both signals. So you have to really have defined setups, however you want to enter the market. The key thing is that once you defined, this is what I'm looking for, then you wait for that to show up and then you enter the market. That way you don't have to rack your brain trying to figure out, well, God, do I do it here or there? And anytime we do that is because we don't really have a plan. And the plan is basically having some kind of a system to trip you into the trade.
And understanding, where are we and how did we get here? Those are the two questions you got to be able to answer.
Yes, that kind of has to happen every day, pretty much, right? Every morning, just to remind us.
Yeah.
It's so easy to forget what happened 2-3 months ago and just get pulled into what's happening now. And that's why I kind of framed it within the triangle that we're making, because as soon as you have those two lower lows and two higher lows, you're starting to coil up. And as soon as you know that, the trending, taking any kind of a trade that's trending is higher risk than normal.
Sure.
And then you just pull back. I mean, every day is not trading day. So you pull back and you wait for your counter trend system to give you buy or sell. Right. Yeah, I think that's a good way to simple.
Excellent. Well, listen, everybody, we appreciate your support. We appreciate the likes and subscribing and everything. So please do that. And we'll talk to you next week. Great job, Barry. We'll talk to everyone next week.
Thanks, Ben. Good job. And have a nice trip out of town.
All right.
We'll talk to you later.
Thanks. Bye-bye.
Bye.